Hey, good morning, Europe. It is the 15th of July and Spain is through to the final. Are there any Spaniards in here? Españols who are very happy this morning, or are you too hungover to even be here? I wouldn't blame you. I imagine that was quite an excitement. I had a couple of family members who are in Spain on holiday at the moment, and they were reporting that it was quite the atmosphere. I definitely recall being in Spain the moment that Spain won the European Championship. It was mad. Anyway, so there you go. And I imagine there's a few heartbroken Frenchmen, and who can blame them, honestly. Um, the nationalism that an event like this stirs. Hi, ladies and gentlemen. And I can be on the sidelines knowing full well that Denmark is nowhere to be seen because we didn't even make it across the threshold. So doing the espresso, I think that order needs to be. I think I made yeah, it needs to be all the way up here. So espresso short would trigger here. You see how it has just triggered. And I have largely ignored the espresso short, rightly or wrongly. So, but anyway, good morning and welcome to the channel. I hope you're well. Unfortunately, I didn't get to set up absolutely everything I needed to, because I've been preparing for a while, obviously, but I sort of had to reset everything just before everything kicked off. So that just caused, I'm afraid, an unexpected delay. So I apologize if I come across as if I'm not quite prepared, which actually technically is true. But only from an IT point of view. So there you go. I think I'm all up and running now. Did you hear that Bonnie Tyler had passed away? Loved her anthems. Total eclipse on my heart. The official office temperature this morning is 34.9 degrees. 34.9, and I'm drinking a hot beverage. I'm sure there's some logic to that. So we have a gap down on both the DAX and the FTSE. And what we've seen in recent days on both the DAX down, FTSE has a tendency to recover from that gap down. If you look at the daily chart, perhaps it'll give you a sense of where we are. We have a big bull, big bear, and then largely sideways trading range. Yesterday was quite a big range. I don't know if you saw this, but this was quite an interesting setup, which I am certain that I'm able to draw. And full disclosure, didn't trade it, but I was definitely observing it. And so connected that low there. Could have also connected that low. It came down and touched and go, oh my God, should I? Should I not? The DAX is not playing ball, so the first thing I'm going to do, because you'll notice that we are now 5 minutes in, I will delete this espresso order. I will also eat humble pie and say that the espresso to the short side would have yielded 40 points so far. Let's get rid of the long order. Order removed. And let's just clear the drawings. So that's a very strong first. That's an 80-point bear bar in the DAX. That is serious selling right out of the gates. The daily chart displays after the big sell-off, we've had a week now of sideways, essentially a range-bound market, and we are now probing the lower end of the range. What I think I would like to show you. And just so you know, we got a first bar negative over in the FTSE. So that's the first signal of the day. I wanted to show you the DAX cash market. Stand by in the FTSE, please. So I've created an order to buy the FTSE at 104.61. It feels brave and contrary to be a buyer. That's filled. $104.61.2. 104.31.2. this is a first bar negative FTSE setup. So here's the DAX index on a cash basis only. So if I show you, we could do it on a 10-minute chart because it gives you a little bit more data. And it gives you a sense of the sideways trading range we have. And if I then plot the current price, which is 24,913, which is here, and the low of yesterday being 24,868, you get a sense of where we are in the grand scheme of things. Those two lines that I just drew, the current line and previous day's low, also coincides with this would be Thursday. So this is Thursday. That's Friday. That's Monday. And sort of gives you a sense of where we are. Yeah. There you go. If we then zoom out a little, what might we be able to conclude on the basis of this? Well, we're back down to a critical area. And here's the even bigger picture. Yeah. I'm not going to ask if this makes sense. I'm just going to show you how it looks. Okay. So I'll post this on Telegram. And then you sort of have a reference. No overnight range. This is just pure cash market, no overnight range. All right, enough of that. Now let's do a retrace of the first bar, 24,978. Could be interesting for us. Now, the reason why I showed you a 15-minute candle is because one thing that I've noticed as a weakness in the first bar negative setup is that, yes, fine, you're buying a first bar negative, great, understood, well researched. However, what hasn't been researched so well it has by me, but I haven't told you about it, is that if the first 15-minute candle, the one that completes in approximately 1 minute, if that closes near it low, then the odds of success on the first bar negative 5-minute entry bar is significantly diminished. So the idealized scenario of first bar negative is something along the lines of this. Let me get a, maybe not this one, we'll do a fresh paint. So the idealized version of it would be something like this. Trigger, we'll make that in red, trigger, and then down a bit, and then very quickly seeing a push higher. That's the idealized version of when first bar negative works the best. However, if we begin to linger down here, then the odds of success are significantly reduced. That's why I am keeping an eye on the 15-minute bar. So now we have the 15-minute bar. I can say, okay, we're currently risking 30 points, but we don't need to risk 30 points now, because we got a close here in the FTSE, and we got a low which is at 104.58. If we begin to trade down in this area here, then the odds are much bigger that we're going to continue lower. And so we don't really want to be part of that game. So reality is that what we could do with this current 15-minute bar that has a low at 104.64, we could say, you know what, we're going to move our stop loss up to this area here at 104.64. So we can move our stop loss up to, say, 104.61. What are the odds of getting stopped out? Well, as I said, the first bar negative is meant to take off. It isn't meant to linger. But of course, I'm sure that the FTSE players are also keeping an eye on what's going on in the DAX. So under these circumstances, will I be aggressively adding to the FTSE? Probably not, because I feel that the FTSE and the DAX works best in unison when you have a long position in the FTSE. Those tend to be best supported when the DAX is also firing on all cylinders. And you can't say that the DAX is doing that. It could it can barely retrace above prior bar high. You see that? So sellers immediately came in here at 24,948. So maybe we just take 5 points in the FTSE, or maybe we just go, you know what, let's just leave it. At its best, we were 12 points in profits. I think I'm of the opinion that I'd rather get stopped out for nothing than trying to guess that the FTSE will do a retest of the lows. Then you can begin to say, oh, well, maybe I should just lock in a little bit, maybe take half profit, and say, well, you know, you can do that. But I think in the grand scheme of things, you would be thanking yourself for just trying to let it run. So in the DAX, I would be attempting to find a place to sell short. Now, one option that has already presented itself was to be a seller at the prior bar high. You can sort of look at that as a, well, we had a bit of a reaction here, and that formed the high of the second 5-minute candle. That is being retested here, and sellers immediately came in. This is on a 1-minute chart now. So the odds must be that we see new lows. Because even though we have this to work with, they don't necessarily get it right on the first hit. We may need to see 24,868. And then there's a gap here that was never filled. From 802, but hey, there's that's a lot lower. So, if you're English, today is a big day for you, huh? You'll be playing the mighty Argentina. I wish you all the best. So the last retracement that we had in the DAX was 48 points. So if anybody sold up here and they were operating on, say, a 1-to-1 risk to reward, they would probably have a stop loss up here, perhaps, meaning that perhaps what they would be looking for is what they just got here, which basically is a double bottom. But let's say that they wanted to go for the double. Then we need to get down here. That would be 24,848. Yeah. The FTSE just spiked. I didn't see it. I was doing something else, and I've been stopped out for nothing. So that sort of gives you a visual representation of what might be going through the minds of traders. Now we can then decide what we are going to do. Let's look at that 15-minute chart again. We got a first bar negative on the 15, but we got a fair tail. We still got 6 minutes to go. What I could do is to run this through the situational analysis software. We could do that together. So we'll do the FTSE. Today's Wednesday. We got it was a bit of a gap down, wasn't it? It was a gap down. And we got a first bar 15-minute negative. And what are we going to assume that the second bar is? Also negative? Probably. And let's just assume that it's an inside bar. It might not be. We have very few Wednesdays doing that, but there you go. And that would suggest that, and this is a 15-minute chart, that would suggest that 3, 4, and 5 will see lower prices. And here as well. So we cannot rule out that we need to be short in the FTSE. Now, if I say it's not an inside bar, well, then the odds are even higher that we need to be short. Yeah. But with the caveat of, so anyway, so let's just look at that. So we need to be short the FTSE here, shorting at 104.56. And you see how the DAX is now going for the second target, which is 24.848. It's just some basic drawing math. I'm happy to explain it to you if you want. But there you go. So that's an area where this tool is incredibly. It's just a phenomenal filtering process. That's what it is. Yeah. You still have to trade it. It just gives you historical evidence. And you can't take your eyes off the market and go, oh, well, we're probably safe because, hey, anything can happen. So let me remove that, and then let's look at the FTSE and say, okay, I can go, oh, where this happy to explain it to you incredibly. It's just a phenomenal filtering process. That's what it is. Yeah. You still have to trade it. It just gives you historical evidence. And you can't take your eyes off the market and go, oh, well, we're probably safe because 86. Oops. So if we're looking at the FTSE, let me just get rid of this. And if we clear up all the chart fun, we can say, well, how could we analyze this? You know, what kind of structure could we possibly come up with here? Well, if we're looking just at the price action that we've seen so far this morning, then we have 21 points down. And we have 15 points up. If anybody is selling the break of 2 on a one-to-one basis, then this is what they'll be going for, 15, which is what we just hit. And let's just say for the laughs that they want to go for 2-to-1. Then we'll see the FTSE down at 104.27. We're coming up to school run in the DAX. Which is the half-hour mark. I think I'll create a new chart so we can appreciate, shall we say, the maths. Yeah, and then we'll clear it on this so we have a better viewpoint. We need to be careful not to let this FTSE slip into a loser. But you see how the first objective was met. I think the best thing to do is to operate on the 15-minute candle and say let's do that on a 10-minute. Say we want to have a stop loss here, risking just 13 points. And we could consider taking some profits. We've already had a 10-pointer that made nothing. Why don't we just close half of it here? Then at least we can say that we had something to show for our. Because I don't know how aggressive I want to be. So I'm just going to move stop loss to break even. So there you go. The stop has no price action merit. It is just, hey, protect your capital. Now, if we're looking at school run, what are we dealing with here? Well, we got 2 bars that are negative. We have already superseded our targets. So we can attempt to go, okay, we had a bit of a gap down. It is a Wednesday, and we got a first bar that is negative, and we got a second bar that is negative. School run short definitely worked there. That's not particularly applicable. This is what we want to avoid, isn't it? We want to avoid a selling short and then seeing a strong reversal. Obviously we can't, but there seems to be evidence that with 2 strong bear candles down, there are occasions where you're going to get a trend day, like here. And what we don't want to engage with either is paralysis through over-analysis. We want to avoid that. But this area here most certainly could come into play. We've already hit the first objective, which was 442. What we can do is we can put the short out again if we get a close below 104.42. So this is me trying to create a roadmap for us. Sometimes all that explaining facilitates a bit of an inability to act. Because when you explain, at times you're taking out of that flow, that flow state where you just go, sell short, don't overthink it. Not criticism, just perhaps a reflection of that when you are creating a running narrative, yes, you crystallize your thought, you elucidate it to yourself. But there's also somewhat of a stop-start sensation. I haven't actually checked comments this morning, so let's see. Okay. Adrian says, looks like a trend day. Well, you might be right, Adrian. Anka is saying, good morning. Good morning. Who's Mr. H? Me? Oh, I see. And Manfist is saying espresso is wonderful. Yes, it is. Thank you, Richard. I see. Good comments. Thank you, Richard, with the brunch break comment. Okay, somebody has just said, funny comment. I think I just got clipped on the FTSE. Never mind. Bit of a weird comment. But actually quite funny. Tom, if you're so rich, why don't you have air conditioning? Fair point. Very fair point. Yes, Tifa. If we're looking at the DAX now, it's currently trading at 850. So this chart here, which is what we call regular trading hour chart, sort of gives you a sense of where are we on the DAX right now. DAX is trading at 864, which is right here. So we tested the lows of yesterday and also from previous trading days. Let me make that a different color so it stands out a little bit. There you go. This gives you a sense of what we're dealing with. So maybe this is the point where the swing trader's going, I want to be a buyer of support around 860. Let me just adjust this. There's 860. Which is probably why being a seller on a school run short here might not be the best of ideas. But if we do get a trend day, Wow, that's a lot of, what is it they say? There's a lot of open space below. I think I would like to do something here in the FTSE that makes sense to me, and that is to sell short here at 46 and then have a stop loss about 15 points away. Up here, 50 short here at 46 and then have a stop loss about 15 points away. Up here. And then go for that we're gonna hit 104.27. I think I'll launch a FTSE chart as well without all the scribbles. So we can appreciate the chart. Yes, I did the position with 20. Yeah, I've commented, Massimo, I have commented on that gap as well. You'll see down here There's a gap down here, and that would take us all the way down to 24,651. And yes, I traded this in a fifth of a size. I just perhaps not quite feel that this market is an environment where I want to aggressively pursue a position. I think I'm going to get stopped out. That didn't work. Okay. I always sort of secretly am pleased if I do a sort of an experimental position and I do it in a much smaller size. What would be a really interesting rhetoric would be to say, okay, let's look at bar 3. Bar 3 is 20 points. Good comeback. What if I engage in right, I want to risk 20 and I'm going to bet on new lows. And if we get down to new lows, I might expect a trip down to 104.20, which is incidentally yesterday's low. I think that's probably not the worst trade idea in the world. I think I'd like to try that. Selling the FTSE here at 104.62. Stop loss here at 104.83. Betting on new lows coming and then a push to 104.21. What we could do in the DAX is we can go through. We know what the circumstances are. We know that we got a first buy negative and we got a second buy negative. So what we can do is we can look at the past where the third bar is positive, which is here. And you can say, okay, that actually sets up a push higher for the rest of the day. Bar 3 is positive. and that sets, and that makes bar 3 the low of the day. Here, bar 3 is positive. We just peak above it, but we have one more leg down. Bar 3 is negative. Bar 3 is negative. Bar 3 is positive. Now that doesn't quite fit the structure that we have. Let me put this into presentation mode. Because here bar 3 actually takes out the high of 2 and also goes all the way up to 1, thus creating a trading range. We're looking at where we have a negative open, which is what I have defined, gap down. Bar 3 is positive. We trade above 3, and that sets in motion 3 being the low of the day. Bar 3 is positive. We trade above 3, not for very long, goes into a sideways range, makes new lows, recover, and new lows. Bar 3, not really applicable to our current price action because 3 takes out 1 and 2. 3 is not positive. 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 3 is positive, but not applicable to our current situation. 3 is positive. We're trading above 3, but only momentarily, and then go into a sideways change, new lows coming, and only much later in the morning do we begin to see follow through. 3 is not positive. 3 is not positive. 3 is positive. And of course, this is what we want to avoid, and that is that we take out the highs of 3, and then we have another leg down, creating a bull trap. Is that possible? Of course it is. But DAX is now recovered. It's now trading above 24,900, which is the high of bar 3. If you'll see that here. Yeah. So we're now. So what we're doing now is we're sort of building a picture here, saying, do we dare take a long position in the DAX right now? Well, considering we're just in a sort of an educational mode, let's continue with this. What are the risks if we do it? What are the risks if we don't do it? Well, the risk, for example, is that we have a fake and then we still get a bear close. Okay, fine. Another example here, exactly the same. We're not done. Oh, sorry, I looked at the wrong bar. We're looking for places where bar 3 is positive. Here, well, we never get that follow through. We don't get follow through above 3. Bar 3 is not positive. Bar 3 is positive. Well, I suppose can't dismiss it just because it's. But there you go. There we actually trade above bar 3, but not until bar 5 and 6. And it's short-lived. Bar 3 is negative. Bar 3 is negative. Remember what we're doing here is we're looking for places where bar 3 is positive. Bar 3 is negative. 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 Bar 3 is positive. Don't get any immediate follow through. Bar 5 attempts, but doesn't succeed, and we trade lower. Bar 3 does get follow through, but creating a beautiful bull trap. Bar 3 is definitely positive, but only very short-lived. So there you go. That's all the examples. So what are the risks if we don't do it? Well, going back to the first one, we had some fantastic situations where bar 3 was actually the low of the day, or really marked the low of the day, for example here. So what we could do conservatively, we can say, well, look, do we want to be a buyer now because we're trading above 3 high? Sure. If you can justify it, my FTSE position is going against me, so that would support the long scenario. Then you can try and be a little bit smart about it if you want, and of course we want to do that. The last retracement was 25 points. That would take us down to this area here called 497 if you wanted to pursue. The long side. So now you got a full analysis. Do you want to take the long side? I think we should. But what we could do, if it makes you uncomfortable, we can say, why don't we just trade it in a smaller size? We can say, let's trade it in a third. And then we say, we're looking at the 15-minute chart. I say, well, what we don't want to see is the DAX coming down to the low of the current candle. We don't really want bar 4 on the 15 to close negatively. That means we are risking about 40 points. So this is a real if-then analysis, isn't it? Now I appreciate that I keep an open house here, but that doesn't mean that you can say anything to me. And I appreciate we can have different opinions, but let me point out something that I don't appreciate. So this is back to our friend from yesterday who believes that VWAP is the be-all, end-all of all analysis. Volume-weighted average price. So if there was 100 contracts traded at 10 and 100 contracts traded at 20, well, then the VWAP would be 15 if it was just on a like-for-like linear. And so he's saying DAX is already getting back to VWAP. So after so much of your analyze, which is obviously a reference to what I did, something simple just tells us where it goes. And I write back, there's an arrogance to your writing that sits very uneasy with me. I never ridicule your approach, but you ridicule mine. I'm trying to teach an analytical framework. I'm happy VWAP works for you. May it long last, but please do show some respect that not everyone sees the world as you do. The last time I checked, you traded half lots and 1 lots. Look, I get it. You find something that works for you, and great, may it long last. But just be mindful that there are, even with the best tools, still perhaps just at best a 60% chance that you are right. So when people write to me with such certainty, I get very uneasy, because what I don't want people to experience is that they believe so fervently in their approach that they don't have the ability to acknowledge when they're wrong. Yeah? Everything works some of the time. Nothing works all the time. And I have deliberately kept this gentleman's name out because I'm not trying to shame him at all, but I do publicly want to declare that I think it's very nice that you are confident with your approach, and be it Al Brooks, Inner Circle Trader, Larry Pesavento, Fibonacci, Tom DeMark, whatever it may be that you use to make a living, it's all fine by me. But also have some professional etiquette, and that says, hey, I may not have the only way of making money. If you do come to me and you say that Venus is square Uranus, then I probably will just throw a little bit of ridicule your way. Anka is saying you're brave for buying. I don't think I am. I think I have just categorically gone through the entire catalog and stated, right, these are the odds, and the odds are probably higher of a reversal only marginally, but based on the evidence that I have just shown you, I think the evidence is there for a push higher, but probably only 60% versus 40%. I think it's a very I think it's a very balanced and strategic decision to do. So I have a friend of mine, he just says, Tom, the earth is flat. Let's argue that. So, all right, I give up. I can't do that. I can't do the whole flat earth. Philip wants to know what I had for breakfast. Okay. Philip knows about Meebob. Do you know what Meebob is? I think you can find it in the archives of Trader Tom. Meebob, do you happen to have that link available so I can share it with people? Or is it in the resource channel? All right, Meebob is in the resource channel. my FTSE is not working. At least not yet. Perhaps there's also some awareness that I should be mindful of here. What is it that I'm trying to do? Well, I'm trying to sell short the FTSE. Fine. Okay, you made your position clear. And you're trying to you're shorting the FTSE and you're buying the DAX. But why don't we just for a moment appreciate what the two indices are doing and what it is I'm doing? DAX is down 0.5%, and the FTSE is down 0.25%. So perhaps the irony here is, why am I long the weakest one and short the strongest one? Do you see the irony here? Because it's not lost on me. Andrea is saying, you said yesterday that you will ask for SRS and anti. Do you know, Andrea, I haven't gotten around to it. Sorry, mate. I do my best to attend it. So I don't know if you saw this, but you remember I was saying you could just be a little niftier and buy a retracement. So the last retracement we had was 25 points. Let me just draw that again. 23 points, and from high to low, 26 points. But the FTSE doesn't look good to me at all. If I clear out all the drawings, yeah, I don't think that's going to work out. But I will leave the stop. So this is turning into a sort of a bit of a, I wouldn't go as far as to say it's a boring session, but it just doesn't quite have the oomph to it that I had hoped. If you go to tradertom.com and you go to the resource in memory of avid trader, there's a section there on MeBob. I don't think that's going to work out, ladies and gentlemen. Show you. Now, to my credit, and I'll take a little, I decided to trade that in a fifth of the size, and I've stopped out. Just going to type this up. Nice V-shaped recovery in the FTSE. I just want to test something here. Okay, so I just want to point something out to my friend, and I hope that you will take this in the spirit that it is meant. Do you see this volume profile here? Yeah. You see this volume profile here, I trust, yeah? VWAP uses two components, price, obviously, and it uses volume. Are you with me so far? I can absolutely fucking, sorry, I have made a pledge not to swear anymore publicly, so I will do this without the swearing. I can absolutely 100% guarantee you that the volume numbers that you're seeing here has nothing to do with volume. So I'm addressing this gentleman here who calls himself CG. I want to be on your side as well, and if you can use VWAP, great. But I will urge you to contact TradingView and say, hey, this volume data that you're giving me, it has no alignment with the data that I am seeing on a DAX futures contract. Because I got DAX futures right here, and if I add volume to it, that's real exchange volume that I'm getting from the exchange itself. Yeah. So I know how much. Do you see the blue up there? It tells me what is traded in terms of volume, in terms of contracts. Now, I then contacted this broker here, Trade Nation, and I said, "Hey, you got a you got a function here called volume." Where did volume disappear to? Here. You got a function here called volume, but what exactly is it? And it turns out it's not volume. And I bet you TradingView is exactly the same. Do you know what it is? It isn't volume. It is the amount of ticks that the market goes up and down. So if I, for example, put here volume 240, it says here at 2 minutes past the hour. That 240, that's not contracts traded. That's ticks. The market's gone up 1 tick, down 1 tick. Not that it goes up 10 ticks, it's 10. No, if it goes up 5 and down 5, that's 10 ticks. That's volume. And that's got nothing to do with volume at all. So, hey, I'm on your side. Trust me, I am. I just don't want you to fall trap for something that you think is one thing and reality it isn't. However, the flip side could be said, well, what do you care? If I just clear this out. Now, and so, I just want to come to your rescue here. We have 40 points in profit in the DAX, so we're doing okay. What we could say is, right, I might be using something that has nothing to do with the original invention, but hey, why don't I just use it as it is. There you go. That's just my 2 pence worth. Now I don't know how to get rid of this volume. Studies, get rid of it, stop. No. Also, your charts, CG, they look very different to mine. But good for you, mate. I just wanted you to be, I don't want to rain on your parade. I'm very happy for you. Of course I am. But I will perhaps just say, use a little caution, because I don't know what it is that you're using. Yeah? You strike me as a very sensible person anyway, so I trust that my message landed with you in the spirit that it was intended, rather than criticism. You're welcome, my friend. Okay, bit of a funny day. It has been. So the 15-minute bar here, well, it's kind of doing what we were hoping it would do. So why don't we move stop loss to break even, and then hope that bar 3 is the low of the day and we're not seeing too deep a retracement. Just so you know, I'm not trading full size in the DAX either. I traded full size early in the FTSE, and now it's sort of turned into a bit of more of a training session than anything else. Great recovery in the FTSE, huh? So the school run long has triggered as well. So we really should be long as well from 49. So what do you say that we call this a little bit of a shorter session? We've been streaming for just an hour and a half, roughly, an hour and 20. I got a position going. Probably better that I don't touch it, just leave it. It's not a big size. But stop losses are break even, and then I can go and do some of the admin that I never finished yesterday because we just kept talking. And then later today, I'd like to take you through some stories about Oldman and me Bob. I think you'd like those stories. Okay? So I think that's what we'll do. I'm leaving you here with this. And the transaction history for today is, well, you can see that for yourself. We made a bit in the FTSE, then we made a bit more, then we lost more, and now we got this going. So in the spirit of trading, let's leave it running. We should add to it, but I'm not going to, because I need to step away from the screen. So ladies and gentlemen, thank you so much for this morning. I actually do like when we just get talking and I explain things and you tell me what you're doing and we work together. So with that in mind, I will close down the stream now and I will see you for the US session a little bit later on today. Okay? Lots of love. You take care of yourself. I'll speak to you later. And good luck if you carry on trading this. Bye-bye.